Welcome to Nasdaq Trade Talks. I'm Joe Malandrino, Global Markets Reporter at Nasdaq. Joining me is Phil Mackintosh, Chief Economist at Nasdaq, for an update on the latest COVID-19 news, the U.S. and global economies, and how markets are digesting the progress of reopening the economy. And Phil, it looks like the rotation back to old economy stocks could be a sign that the rally is broadening out a bit and old economy stocks are being priced to recover.
It sure does. I mean, if you look at the last 5 days, the Nasdaq, which had outperformed by 20+% since the coronavirus shutdowns, has actually been falling slightly, while the rest of the broader large cap indexes are actually rallying. So what you're seeing there is a lot of people are starting to now rotate into some of those old economy stocks that were more beaten up, which to me shows that investors are starting to look for a vaccine and a return to normal where those companies can then, if it's a restaurant or a hotel or an airline, get back to having customers indoors and more customers on planes. So it's a good thing for the economy if that's what's going on. And but if you look around, there's more and more data coming out about the vaccine progress. I mean, we know there's a couple of pretty high profile ones from Moderna, especially in stage 3 testing now. And if we look at the timeline, there's emergency use authorization that's expected to start sort of October for a couple of them, December for even more. So globally, you've got quite a lot of vaccines that have made it to stage 3 testing and should be available for, I guess, normal people to start to purchase sort of late this year into early next year if the third phases don't come back with side effects or problems.
So it's interesting, you have a chart here, number of vaccine doses secured per capita. Can you tell us more of what you're looking at there?
I mean, that's pretty interesting, isn't it? It's a fairly nationalized response. And Bill Gates this week was talking about how wealthy countries will probably be able to get vaccinated throughout 2021. But what he's talking about there is it's costing a lot to do this research. And obviously, the way markets work is if you've got more money, you can get more things. So the expectation is that wealthy countries will be able to lock up the vaccines first because they'll be able to pay more for the initial doses. And what we can see already is the US and the UK have been pretty active in doing deals with some of the vaccine producers. And ironically, the US and the UK were both pretty slow to implement strategies to stop the spread of coronavirus, but they've been pretty fast to lock down some of the new dosages of vaccines. So when we actually get to production of vaccines, it looks like the US and the UK have pretty good pipelines of supply of vaccines, but all the countries in the world now are trying to work out like which vaccine do they want to contract with so that they have a supply chain of vaccine available to them.
So while the market certainly not the same for everyone across the board, small businesses are continuing to clearly suffer from the COVID-19 associated lockdowns.
Yeah, there's a little bit of new data out this week just looking at business confidence, business hiring intentions. Generally, there's been a recovery, but in terms of the earnings, which is the chart we're looking at today, it's been more in terms of the outlook. But the future looks back to normal more than the current. And right now, you can see this data shows that earnings are really hurting across a lot of the small businesses, which is obviously why it's important that Congress works out a deal with PPP and all the stimulus money to keep those businesses operating through the next 6 months so that they can come out the other side and be competitive and able to service us again when we're back to normal.
So I'm actually really excited about what we're going to discuss next, and that's the Tesla stock split. Stock splits in general, which are typically an anomaly for big companies like a Tesla and an Apple, but even fractional shares. I think this is really exciting for the retail investor.
Yeah, so stock splits didn't used to be an anomaly. It really seems to have started to happen, or I guess not happen, since about 2006, 2007, where everything went electronic and people sort of forgot that manageable prices for stocks and manageable values of a round lot were actually helpful for trading. It's still true, even though algorithms are doing the work. Having a really high stock price makes it much harder to work out where the inside quote is. It makes it more expensive for institutions trying to get large blocks done because there's lots of increments of ticks inside the underlying spread. It makes it harder for retail investors to know whether they're getting a good fill because the actual market only shows blocks of 100 shares, and there's often a lot of liquidity inside that's of 50s and 10s and 12s, which is still worth tens of thousands of dollars for some of these high-priced stocks. So we've done some research that actually shows when companies split their stock, because the tradability improves, the actual market cap of the company outperforms. And so the company's outperformed by around about 5% over a 12-month period. And that basically shows the market's pretty efficient. It knows that a stock split is good for tradability. It makes it cheaper to trade, which actually makes the returns in the company go up, which makes the prices go up. So it's great to see a couple of big companies with high stock prices split their stocks. I'm sure that institutional investors are going to be sort of cheering that on because it's going to make it easier for them to trade as well. But as you said, the growth in fractional shares highlights what a problem this has become. There are quite a lot of multi-hundred and even $1,000 stocks out there, which are just really difficult for retail investors to trade in 100 share lots, and for market makers even to make markets in 100 share lots. It creates a few problems in the trading sphere of the market.
All right, Phil, great stuff as always. Thanks for joining us on Trade Talks.
Thanks, Jill.
And thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.